Welcome to our deep dive into the world of cryptocurrency. Today, we're tackling a hot debate. Is crypto more like gambling or investing? With headlines constantly swinging between stories of overnight millionaires and tales of devastating losses, it's no wonder people are confused. In this video, we'll break down what makes something an investment versus a gamble and see where crypto fits in. Whether you're a skeptic or a believer, understanding the difference is crucial before putting your money on the line. Start by defining what investing really means. Traditionally, investing is about putting your money into assets like stocks, bonds, or real estate with the expectation that they'll grow in value over time. Investors typically analyze fundamentals, trends, and risk before making decisions. The goal is to build wealth steadily, often over years or decades. This approach relies on research, patience, and a long-term mindset. So does crypto fit this mold? Let's keep exploring. Now let's look at gambling. Gambling is all about risking money on uncertain outcomes, often with little control or predictability. Think of casinos, lotteries, or sports betting. The odds are usually stacked against you and luck plays a huge role. While some gamblers try to use strategies, most outcomes are random. The thrill comes from the chance of a big win, but losses are far more common. So is crypto just another roll of the dice? Cryptocurrency markets are famous for their wild price swings. One day Bitcoin is soaring, the next it's plunging. These dramatic ups and downs can feel a lot like a casino game. Many people are drawn in by stories of quick riches hoping to catch the next big wave. But with such volatility, it's easy to lose just as quickly as you win. This unpredictability is a key reason why some critics call crypto gambling. Not everyone approaches crypto the same way. Some treat it like a serious investment, spending hours researching projects, reading white papers, and analyzing market trends. They look for coins with strong technology, real-world use cases, and solid teams behind them. This research-driven approach is much closer to traditional investing, where informed decisions can lead to long-term gains. Big part of the confusion comes from speculation. Speculators buy assets hoping their price will rise quickly, often with little regard for fundamentals. In crypto, speculation is rampant. Many people buy coins simply because they're trending. While speculation can lead to big profits, it's also risky and unpredictable. True investing, on the other hand, is about careful analysis and patience. Volatility is a defining feature of crypto. Prices can swing wildly in minutes, driven by news, rumors, or even tweets. For some, this volatility is exciting and offers opportunities for quick gains. For others, it's a source of anxiety and loss. Understanding and managing volatility is key to deciding whether you're investing or just gambling with your money. Smart investors always think about risk management. This means setting limits on how much you invest, diversifying your portfolio, and being prepared for losses. In crypto, risk management is even more important because of the market's unpredictability. Without a plan, it's easy to get swept up in hype and make impulsive decisions that lead to big losses. Emotions play a huge role in both gambling and investing. Fear of missing out, panic selling, and chasing losses are common in crypto. Successful investors learn to control their emotions, sticking to their strategies even when markets get rough. In contrast, gamblers often act on impulse, letting excitement or fear drive their decisions. Luck is a factor in both gambling and investing, but it plays a much bigger role in gambling. In crypto, luck can sometimes lead to big wins, like buying a coin before it skyrockets. However, relying on luck alone is a risky strategy. Long-term success in investing comes from research, discipline, and patience, not just chance. Another key difference is regulation. Traditional investments are often regulated by governments, offering some protection to investors. Crypto markets, however, are still largely unregulated. This lack of oversight means there's a higher risk of scams, fraud, and market manipulation. Always be cautious and do your homework before investing. Investing is usually a long-term game, while gambling is all about quick results. In crypto, some people hold their coins for years, believing in the technology and its future. Others jump in and out, hoping to make a fast buck. Your approach, long-term or short-term, can determine whether you're investing or just gambling. Crypto communities are passionate and vocal. Online forums, social media, and chat groups are filled with advice, predictions, and hype. While community can be a great source of information and support, it can also fuel herd mentality and risky behavior. Always think critically and make your own decisions. One thing that sets crypto apart is its underlying technology. Blockchain, smart contracts, and decentralized finance are driving innovation in ways traditional investments can't match. Some investors are drawn to crypto because they believe in the technology's potential to change the world. This focus on innovation can make crypto more than just a gamble. Unfortunately, the crypto world is full of scams and pitfalls. From fake coins to phishing attacks, there are many ways to lose money. Unlike regulated markets, there's often little recourse if you fall victim to fraud. Staying informed and cautious is essential to avoid turning your investment into an expensive lesson. Winning big in crypto can be exhilarating. The rush of seeing your investment skyrocket is similar to hitting the jackpot in a casino. But this excitement can be addictive, leading people to take bigger risks in hopes of repeating their success. Recognizing this psychological trap is important for making rational decisions. Loss aversion is a powerful force in both gambling and investing. People tend to fear losses more than they value gains, which can lead to poor decisions, like holding on to losing investments or doubling down to recover losses. In crypto, where prices can drop fast, managing loss aversion is crucial for long-term success. Diversification is a classic investing principle. Don't put all your eggs in one basket. In crypto, this means spreading your investments across different coins and projects. Diversification can help reduce risk and smooth out the wild swings of individual assets. It's a key strategy for turning crypto from a gamble into a more stable investment. Trying to time the crypto market buying low and selling high can be tempting, but it's extremely difficult. Even experienced investors struggle to predict price movements. Relying on timing alone is risky and often leads to losses. A better approach is to focus on long-term trends and avoid making impulsive trades. Media coverage can have a huge impact on crypto prices. Positive news can send prices soaring, while negative headlines can trigger panic selling. Being aware of media influence and not reacting emotionally to every story is important for making sound investment decisions. At the heart of crypto is blockchain technology, a decentralized, transparent ledger that records transactions. Understanding how blockchain works can help you evaluate the true potential of different coins and projects. This knowledge separates serious investors from those just chasing hype. Some crypto investors earn passive income through staking, lending, or yield farming. These strategies involve locking up coins to earn rewards or interest, similar to earning dividends from stocks. While passive income can add stability, it also comes with risks, so it's important to understand the details before jumping in. Everyone makes mistakes in crypto, whether it's buying at the top, selling at the bottom, or falling for a scam. The key is to learn from these experiences and adjust your strategy. Over time, learning from mistakes can turn you from a gambler into a smarter investor. Patience is a virtue in investing, and it's especially important in crypto. Markets can be unpredictable and prices may take time to recover after a downturn. Patient investors are more likely to see long-term gains, while impatient ones often make costly mistakes. Setting realistic goals is crucial for success in crypto. Instead of aiming for overnight riches, focus on steady growth and manageable risks. Clear goals help you stay disciplined and avoid the emotional roller coaster that comes with chasing quick profits. The more you know, the better your chances of success. Take time to learn about blockchain, different coins, and market trends. Education helps you spot opportunities and avoid pitfalls, turning crypto from a gamble into a calculated investment. Hype is everywhere in crypto. New coins, celebrity endorsements, and viral trends can create a frenzy, but chasing hype often leads to disappointment. Instead, focus on fundamentals and make decisions based on research, not excitement. Knowing when to exit an investment is just as important as knowing when to enter. Setting clear exit strategies like stop-loss orders or profit targets can help you lock in gains and limit losses. Without a plan, it's easy to let emotions take over and miss your chance. At its core, crypto is a tool. How you use it determines whether you're investing or gambling. With the right mindset, research, and strategy, crypto can be a powerful way to build wealth, but without discipline, it can quickly become a risky bet. So is crypto gambling or investing? The answer depends on your approach. Treat it like a get-rich-quick scheme and you're likely gambling. Approach it with research, patience, and a clear strategy and it becomes an investment. The choice is yours, so make it wisely and remember, knowledge and discipline are your best allies in the world of crypto.